Hi guys, it's Thomas here from COTBase.com. Welcome to this week's Commitments of Traders review. Today we're going to have a look at the 46th COT report in 2013. And of course, as usual, we're going to start off with the changes in commercials positions. So here we go. Copper is on top of our list. We've got a 25% change in commercials positions, 30% change in large speculators, and if you look over here, we had an all-time COT Extreme in large speculators. So we're going to have a look at that soon, but first the changes. Here we go. You can see the change size over here, larger than average. We do see large changes in the past. We had a similarly large change back over here. A little bit of price reaction towards it, then a few large changes following each other just before basically prices bottomed out over here, and then we see higher prices. And then the last one a few reports ago, maybe a little bit late for any trading opportunity. So, but let's open a 5-year chart and see this all-time COT Extreme, which is quite interesting. The extreme is over here. Large speculators are below 30,000 contracts net short. They've never been at such levels before. And if you look at the 5-year chart, you can see that whenever the extreme was present in this market, prices reacted really nicely. So we can state that COT signals in copper market are pretty effective, and we should be expecting high prices sooner or later. Both of our signals are pointing in the same direction. Japanese yen, our next market, the same change size in commercials, 25% change, a bit larger change in large speculators, 28% change. But if we look at this 1-year chart, you can see that nothing really extraordinary. Actually, last week we talked about this larger change, but you can see prices did not react towards this signal. So might as well open the 5-year chart and see whether these large extremes both in large speculators and commercial positions will have any effect on us. Let's see. Here we go. You can see that basically this extreme, the level of extreme, has been present for quite some time, almost a year now actually. The end of last year, we had this all-time extreme. Actually, it was in small speculators, but still commercials and large speculators were very close to this, to an all-time extreme level. Prices did not react. This was a commercial capitulation, very rare thing to happen, but when they do in markets, usually we see a huge and very large reaction in prices. You can see in this case, prices just heavily dropped afterwards. And by looking at this chart, well, I wouldn't say that this is the point, and we should be expecting a huge trend reversal. I mean, come on, this was the case for quite some time now, and prices just didn't really react. They're still pretty low, and I would say that this could go on for quite some time before prices change their mood. We may need to see an even greater extreme before we can start thinking about a bullish opportunity. I don't know. That's my opinion. But anyhow, let's move on and have a look at the S&P 500. We have a 20% change in commercial positions, a 26% change in large speculators, and nothing to talk about in small speculators. Of course, if we look at the chart, again, nothing huge, nothing big, nothing I would say we should be talking about. It's maybe the extreme that could be a bit more interesting for us. So let's open this 5-year chart, and here we go. You can see that in S&P, we are not that far away from large extreme levels. We've moved away from them, and you can see prices did not really react. We couldn't see a huge change in the trend. Prices are still in rally mode, skyrocketing, and of course this may easily continue and go on for quite some time. So not much to talk about. Soybean oil, let's have a look at soybean oil. We have 19% change over there in commercials, and basically the same change in large speculators. Here we go. You can see the change over here pointing upwards. It's definitely a bullish signal, larger than average. We do see greater changes than the past. And if you look at the chart, you can see that whenever we had large changes, that usually push prices in the direction of the signal. So let's open a 5-year chart and see if we have an extreme, here we go. Well, we can't really talk about a huge extreme. We talked about one a few months ago. You can see it was actually a false signal back over here, this one, and then we had another great extreme that sort of pushed prices higher, but still they're in a declining mode, a little bit similar to the Japanese yen. I wouldn't say this is a commercial capitulation, but still, I mean, commercials could actually, the participants over here may widen their extreme. We may see even greater extremes before we get to the bottom in soybean oil. Let's have a look at the large speculator COT Extreme. Here we go. Copper, Japanese yen. Okay, we talked about those markets. Quite interesting that we have both the changes and the large speculator COT Extreme ordering markets in the same way. But cotton, we haven't talked about cotton. We have a 50 report extreme over there. Not huge. But if we look at this 1 year's chart, you can see the large speculators and commercials both being net long. So it's only small speculators being net short. They're the only ones pessimistic about this market. They're the only ones thinking this decline may continue. That's usually a quite bullish signal, actually. So that's one signal pointing upwards. Opening this 5 years chart, looking at the extreme, well, that's actually another one pointing upwards. You can see commercials whenever they were net long, or of course the opposite, large speculators net short. We have another example over here that coincided with bottoms in prices. So again, this is suggesting prices should rally from here. Of course, I'm not saying they're going to rally tomorrow, but stress is there, and maybe in a few days or only a few weeks, we should be expecting higher prices in cotton. Rough rice, okay, that's going to be your last market. 19 report extreme over there. Not a huge extreme, but hey, let's have a look at it. Here we go. You can see on this 1 year's chart, prices are stagnating. Commercials are almost net zero. Let's open the 5 years chart and see this on a wider time frame. Here we go. You can see actually that if we look at the red line commercials, basically they're at the moment closer to the upper band, and that in itself is saying that, hey, we have a larger chance that prices are gonna rally from here than them going lower, but I wouldn't say we have a huge signal in rough rice right now to act on. Okay, that's all for this week. If you would like to have a look at other COT charts, you can do so at our COT charts page. But of course, if you would like to have a more in-depth and detailed COT analysis, or you can add other great functions to our table, look at new COT report types, data types, all sorts of interesting functions, well, hey, check out our subscription service at cotbase.com and have a look at all of our great functions. I hope you enjoyed my review, and I hope to see you next week. Have a great weekend. Take care. Bye-bye.